What's up? I'm Davis, and I'm going to start doing vlogs and putting them on YouTube, I think, of my covered call experience. And so, yeah, here's my portfolio for covered calls. As you can see, I have 3 calls that are existent currently. I sold, and a bunch of other stocks that my calls expired worthless last Friday. This is Sunday, October 31st, Halloween. Happy Halloween. And I'm just doing this really quick, but here's my Excel page. This shows the last 3 months, what I've done, how I've profited, how much money I made in the last few months. I started out as a noob. This was my first trade. I didn't know what the heck I was doing. Then went down, got a little more experience, and then I started messing with higher volatility. And as you can see, this red mark right here, that is for the stock Alibaba. And that I had a little hiccup. I got a little emotional and lost money, and I was bummed because, first of all, I missed out on my profits because of the money I lost for 2 weeks. But then I realized that if I would have just held it, it would have been fine and gone up to the same exact price I bought it at, and I could have profited a lot more from that if I just held and didn't get emotional. So that was kind of like my first learning experience, not to get emotional. And then I went into Roblox, and Roblox is an interesting stock because it's also higher volatility. But of course, right when I went in, something happened and Roblox dropped about 15% or no, 12% price drop. And as you can see here, I got pretty mad at myself. Don't sell calls with a potential loss. You lost a month worth of returns to diversify. So yeah, this was my issue because as the stock price kept going down each week, I was selling weekly covered calls for what I had. Like, first issue off the bat is I wasn't diversified at all. My whole entire portfolio was Roblox. 800 shares of Roblox. I bought it at $80.40. That's the first red flag. That's one thing I really should have been like, oh, that's not a good decision, but I went for it. And even if you do end up doing that, the second thing is don't get emotional. If the price does end up dropping 12% in 1 week, don't get emotional because that is very easy to get emotional about. And if you do get emotional, you end up selling low and you end up selling at the lowest of lows, and you lose the most amount of money when you get emotional, because I've found that when you're chill and relaxed, you don't really care and it doesn't matter. Things end up working out for you. But if you're emotional, you're so quick to sell, even when you're in a potential loss or negative zone. And it just sucks. And that leads me to the third point, that when you're selling calls and if your stock price is way below what you bought it for, never, and I say never, sell a call that will end up with you losing money in the long run. And in this case, this red $2,856 right here, I sold. So I initially bought the shares for $80.40, 800 of them. But because the stock was so low, the only way I wanted to make money, I wanted to make a 1% return each week, and I was trying to keep that consistent. So I sold a $76 strike price call. Look at the difference. $80.76 for 83 cents each share. $83 a contract, 8 contracts. And I was like, oh, if it does sell, I'll lose about $3,000. I'll lose 4.4% of that return if it does sell, but it probably won't sell because I don't think it'll go up. Next thing you know, end of the week, it did go up, and I ended up having to sell it at that price, at the 76 price. I wasn't paying attention. I didn't think it would go above 76. I think the stock price was at 74 or something low. But I ended up having to sell, and I was kicking myself for such a long time. But I did end up selling. Good thing is I got out of that position. I started to diversify, so I went into Bumble, Virgin Galactic, Southwest, Snapchat, Bank of America, AT&T, Aflac, Coca-Cola, and Snapchat again. But I found out that's too much diversification. I think what I'm going to end up doing now is I'm going to end up diversifying enough so it'll be 3 or 4 main stocks, and those will be what I sell calls for, just so that no one stock takes up majority or even 50% of my portfolio. Because in this case, I had like 6 different stocks or 7, and it gets a little too hectic and hard to keep track of. And also, when we had a week like this, a week where it was pretty negative, a bunch of my stocks that did not get sold for my calls because they dropped quite a bit, but I'm not worried about that because now I know I'm just going to hold, not get emotional, and never sell strike price below what I bought it for. So I'm not going to lose money. And Aflac, I'm confident will go up sooner or later. Virgin Galactic, I don't really know about that one, but I'm glad that I only have 100 shares of it and not like 1,000 shares and didn't put a lot of money into it. It'll go up eventually. I'll just keep selling longer calls for a lower return. Like this one I sold it was like a month away. So this one's expiring November 12th, but I was only making like 1.5%. Actually, no, I was making like, let's see. Yeah, I'm making like 1.4, 1.5% return from that, which for a month still isn't really that bad. If you can make 1.5% return in a month off of a stock that's down 17%, that's really not that bad, assuming it'll go back up as well. And yeah, so yeah, that's Virgin Galactic. And then what I also have that didn't get sold because it's down 6% is Southwest Airlines. Whole reason for that is the vaccine mandate and a bunch of pilots protesting and all that stuff. So as you can see, within the month when it started happening, it went down, and I'm not too worried about that. It's a better buying opportunity now because I think it'll trend back up. Maybe not all the way to $50. I mean $54, but I think it'll get back up to the 50 range, and I'll either be able to sell out at close to what I bought it for and just be able to keep making these returns each week, or I'll end up being fine. Snapchat, this is an interesting one. I have 500 shares of this, so that makes my total market value 26,000. And you're like, oh wait, that's more than the majority of my portfolio price because my portfolio is 32,000. But keep in mind, I'm using margin, and I'm getting about $43,000, $44,000 in margin plus that 32. So that's really like the Snapchat is only like 30% of my portfolio, and it is down quite a bit. I'm down. What am I down? I'm down 4.6%. But look at this, guys. Snapchat this month dropped, yeah, literally 21% in one day, which I think is insane. And that was a great buying opportunity. And I'm confident Snap will go up to around the $75, $70. And that's why I bought so many shares. And I'm experimenting with like the 3 to 4 stock thing now. So once I get assigned on these other stocks I own, only like 100, 200 shares of, then I can start doing stuff like Snapchat, maybe go back into Roblox if I'm confident that I'm not going to get emotional about that. And maybe some other stocks. AT&T, that's down as well, but that's fine. It's not down too much this week, and I can sell a call against that. I have the 3 calls set up that I'm going to sell for the stocks I already own. I don't have the strikes picked for Aflac and AT&T yet, but I have it picked for Snapchat. I'm going to make it so no matter what, if it expires worthless, I'm making a 0.9%, so close to 1% return, $250. And if it does expire out of the money, whatever. If I do have to sell my shares, then I'll make $690 with 2.5 return on what I have in Snapchat, which is not bad. And keep in mind, this 2.5% is 2.5% of what I'm using with the margin. So it's really a 5% return of my initial capital if it does end up selling. And I need to look at what stock I will buy. And because $32,000 with margin. That's about $60,000 to $65,000 total capital that I'm able to use. So 23,000 is about a third of that. So I'm probably going to go in and just buy one stock with all that money. And I'm probably going to, I'll look at how the market opens and everything tomorrow, but I'm either going to do Wells Fargo if it drops a little more during the day, or I will do, so yeah, either Wells Fargo, Bank of America, maybe, probably not ExxonMobil, and probably not Twitter. So I don't know. Either General Motors or Wells Fargo is what I'm thinking for tomorrow. But we will see. Because General Motors had a kind of big drop the last week, and I'm confident in the next few weeks it'll go up a little bit. But if not, no biggie, because we're selling covered calls, and that's not even the point. But yeah, this is my weekly log, and I will take another video tomorrow showing what I've done and what I am doing during market hours or right after market hours, just to show what I'm done. And then I will also try to make videos on, so I'll try to make videos Sunday nights to assess what I'm going to do on Monday during the day or Monday after hours. And then Fridays, I will attempt to make a video just to like recap on how everything went. And that'll, of course, be after hours and show what sold, what didn't sell, and what my plans are for next week. And then once again, assess the situation Sunday night and be good to go. But yeah, thank you. I'm Davis, and I'm excited to start this journey and tracking my financial success, hopefully. Hopefully I won't make any more dumb decisions like what happened here and what happened here. And hopefully we can get this list super long and start tracking some gains.